Hello Trade Pros, this is Mark from Trade Pro Academy, and in this weekend's video we are going to be discussing day trading with pivot points. Now before we get into the actual video, if this is your first time on the channel, welcome. If this is your second time or if you're a returning viewer, welcome back. If this is your first time, please do us a big favor. Go ahead and hit that subscribe button and make sure to check off that notification bell to get notified anytime that we go live or anytime that we drop any new content. In addition to that, please go ahead and smash that like button so that we can go ahead and get started with this video. All right, Trade Pros. So now that you guys have gone ahead and subscribed to the channel and you've gone ahead and liked this video, let's go ahead and proceed with the remainder of this clip. So before we get into the actual application of pivot points, how we use them in our day trading, let me first give you guys a little bit on the basics of pivot points, what they are, where they came from, and how we can use them in our day trading arsenal. So first things first, what are pivot points? Well, pivot points are simply a technical indicator that estimates the future support and resistance levels. And because they use the previous day's price action, they use the high, the low, and the closing price. Based on those three variables, you get your pivots. All right. And so because it's based on the previous day's price action and it's a calculation that gives us projected future support and resistance levels, this can be considered a leading indicator. And what a leading indicator means is simply that the indicator does not print a new data set after price has made a move, such as a moving average, Bollinger Bands, stochastics, etc. Those are all lagging indicators. A leading indicator is something that gives us a future projection based on current or previous price. All right, so that is what a pivot point is. And where does it come from? Well, it originated from the floor traders in the pits. That's where it originally came from. And when the floor traders migrated over to electronic trading, this became a big popular tool for a lot of retail traders to start using them as well. But the grassroots or the roots of this indicator comes from the floor traders. All right, so now that you guys know a little bit on what the pivot points are, let's go ahead and talk about how they actually are calculated. All right, so as I just mentioned in the previous slide, pivot points are based on a couple of variables from the previous day. These are the high, the low, and the closing price. And so pivot points generally come with 5 variables. Your points are the actual pivot point. You've got R1, which is resistance 1, R2, which is resistance number 2, S1, which is support number 1, and S2, which is support number 2. Now, you can get pretty creative with these. They do offer a lot of levels. You can go up to, I don't even know, you can go up to quite a few. I've had up to R8, R9 on my charts at some points when the market's really, really volatile. But for a majority of sessions, you are going to find that the R2 and S2 price will stay within the confines of those. Even more so, you'll tend to find that prices generally tend to stay within the R1 and the S1 upside and the lower end brackets. Now, as far as calculations, you guys can see here exactly how these are calculated. Starting off with the pivot, how that's used is we calculate the high, the low, and the close of the session and divide it by 3. So we get the average price of the high, the low, and the closing price, divide that by 3. That gives us our actual pivot point. And these resistance number 1, resistance number 2, support number 1, and support number 2 are calculated based on this pivot calculation. So as you can see here, resistance number 1 is calculated by multiplying the pivot by 2 and subtracting the low. Support number 1 is calculated the opposite way, multiplying the pivot by 2 and subtracting the high. And you'll find similarly for support number 2, you'll take the pivot less the difference between the high and the low, and resistance 2 will be the pivot plus the difference between the high and the low. If you guys are looking at this and you're kind of scratching your heads, man, I got to do math while I'm trying to figure out a trade. You don't have to do that. Majority of brokerages, brokerage platforms, software platforms will have these indicators calculate automatically, so you don't have to worry about the calculations, but it is important to kind of know where these numbers are coming from. All right, so now that you guys have an idea of what pivot points are, how they're calculated, let's jump onto the charts so I can show you how we actually use this every single day in our trading. All right, Trade Pro. So what you see in front of you here is the pivot chart of the S&P 500 futures. This is a Z contract. This is also a 1-hour bar chart for those wondering. And the platform that I am using is Sierra Chart. All right, so now that we've got those out of the way, let's actually discuss what these are, which we've kind of explained already, but I'll show you guys in a little bit more detail how to identify these. So your gray line here, as you guys can see, this PP line, this is the actual pivot line. This one today was 31.21.17. The R1 right up here came in at 29, we'll call it 29.60, and your S1 here came in at around 31.12. Granted, it is around 5 p.m. Eastern time, so we do have these new resistance and support levels coming in from the previous day close. So here's your pivot, there's your R1, there's your S1, and what you can kind of see here already, if you kind of scroll back the last couple of days, is that a majority of the time, as I mentioned, the market will typically stay within the confines of your R1 and your S1. Now, there will be times where they do trade outside of those confines, which is fine, but for a majority of sessions, you will often find that the R1 and the S1 is going to encapsulate the highs and the lows of the current session. All right, so that's basically what that looks like. Now let's get into some of the applications of these actual pivot points. So one of the primary applications of pivot points is a means of a sentiment indicator. And what that simply means is that the general rule of thumb for pivot points is that when the market is above the pivot point for the session, that is considered to be bullish and that you can anticipate to have a bullish day. All right. If the market opens under the pivot, that generally tends to mean that the market should stay below the pivot, that we should have a bearish session on the books, and that the target would be S1 in this case. Now that is the primary indication, and how we use this on a daily basis is we'll come in the morning, and before 9:30 a.m., before the US cash open, we'll take a look at where price is with relation to these actual pivots. So what you guys will see on today's session is that around 9:30, that's right around here, we were actually under the R1. And so that kind of gave us the initial indication that we might be getting a little bit of selling pressure to come in at the open, the US cash open. And the reason for that was because, as you guys can see, we traded over the R1 during the Globex session, broke back below it. And when we opened for the US cash open, we were back under the R1. So while this is not the pivot, if you get a move into a pivot point, such as the R1, the S1, etc., and the market fails to hold that level as support after the breakout, and instead it breaks back down below that level can now be seen as a potential resistance level. And what you can do in this case is you can use the pivot points as potential targets. All right, so that's another way that we like to use pivot points, is we like to use them as potential support and resistance levels, and we like to use them as potential targets. All right, so with the idea here that we are below the R1, the market has failed to get back above that level. Now we can say that, okay, the pivot will be our next likely target on the session. And if the market can get back below that level, then we'll look to target the S1, so on and so forth. All right, guys, so that's generally how we like to use these pivots. Is number one, we give us a sentiment indicator for the morning session. If the market is above that pivot, we'll generally look for bullish session. If it's below the pivot, we'll generally look for a bearish session. Now, that being said, as I described earlier, you won't always have the market open right around the pivot. Sometimes it'll open up around R1s. Sometimes it'll open up around S1s. But you're essentially going to be looking for the same thing. If the market opens up around an S1 and has difficulty getting back below that level, and it's holding S1 as support, then you can say, all right, we can look to target the pivot point for potential upside, because the bears are failing to break S1 as support. Same thing with R1. You guys can see here in today's example, we actually open up just below R1. So R1 was actually a resistance level, and the pivot point would be your target for the actual session. All right. So that was today's session. If I look back at yesterday's session, what you guys will see is that over the Globex session, we came into R1. R1 held as resistance. All right, Globex session 9:30 opened up right around the pivot. Guess what? Rotated up, came down. Look where we held that level before we pressed on up. All right, we held the pivot and we continued on up higher. Didn't quite get into the R1, but that was the upside target because the pivot level held. So what you guys should be seeing from this is the pivot points can be used as a sentiment indicator based on where the stock market is or whatever asset you're following. If at the open, the US cash open, if the asset is above the pivot, you're essentially looking for upside. If it's below the pivot, you're looking for downside. All right. If it opens at R1 and it holds that level, then you can say, all right, we can look to target R2 as a next potential upside target. If it breaks below R1, we're going to be looking for the pivot point as our potential target. I know it seems repetitive, but sometimes you need to get the actual idea across, and I hope this is getting across to you guys because it's not a binary kind of an indicator. You will find that markets don't always hold the level to the tick like we've seen in this kind of example here. Right, markets won't always hold it directly like that. This is not to be taken as a individual strategy, but as a piece of a complete strategy. Pivot points can hold a really strong can be a really strong advantage to traders that know how to use them in addition to a set of other variables in their trading plan. Again, not to be used as a sole strategy. This is to be used in conjunction with other indicators, price action tools, whatever it may be that you're using to go forward. All right, guys, so now that you know how we like to use these pivot points, let's jump onto the actual footprint chart and show you guys some examples of how the market reacted around some of these key levels on today's session. All right, Trade Pro, so here is our footprint chart. And again, we're on the S&P 500 contract. And what you guys will see is that I've overlaid my pivot points onto this chart. And right over here, you guys will see this is your R1. And slightly below it there, 3120 is your actual pivot point, and just below that is your S1 right around the 1260s. So let's show you guys exactly how the market reacted around these levels to give you a good indication of how you can use them in your trading, especially in your day trading. So what you guys will see here, first and foremost, this is the test of the R1 overnight. So as you guys will notice down here, this is the timing. So the timing here, this is around 6 a.m. Eastern time. You guys will see that the market kind of broke above the R1, came down into it, and that we had a bit of a battle between the buyers and the sellers until around 8:30. We started to see a little bit more aggressive selling coming through, pressing off of the R1. And the fact that we broke below it here and we came back up, more sellers came in to defend. That was showing you that this level was holding as resistance. All right, so that was your first indication that R1 may be a resistance throughout the session, is the fact that we did see a breakdown below it leading into the 9:30 a.m. open, which you guys will see here. That came in quite aggressively. What you guys are seeing here is a sell stop run, means a bunch of sell stops were taken at that level. And as we scroll on through, you'll see from the R1, when you get back below the R1, the next potential target will be the pivot. And so let's see how that pivot held on today's kind of session. So we're coming down towards it, and surprise, surprise, as the market came down towards the pivot, what you are starting to see is you're seeing a bit of a battle. You're seeing aggressive selling coming through, but you're also seeing aggressive buying starting to come in to that level. All right, and these yellow blocks are the point of controls on these individual rotations. So a lot of volume happening right around that pivot, which is giving you potential support. All right, the pivot is acting as support until we break back below the pivot. So at this point here, we broke below the pivot. That pivot was no longer support. What you could look for it to act as now is potential resistance. And the fact that we've gone back below it, typically what you want to see is a rotation up, and you want to see sellers defend that level in order for us to press on down to, guess where? The S1. All right, and so your S1 was around these 13s, these 1260s, and let's see what the market did here. All right, so next rotation up, look what we got. Next rotation up, we get back below the pivot, we get point of control, and we got some sellers coming in. It's looking good. Sellers are looking to defend that pivot level as potential resistance. If that's the case, then we can look to get short for a run back down to the S1. All right, another rotation, another pop up, pivot still holding intact. And there you go, another rotation down, more selling coming through. So now what you've seen is a break, couple of rotations, retest of the pivot, and now sellers are coming through. This point, you can look to get short for that run down into that S1. All right, another rotation up, and we get back down in here. And now as we're starting to rotate this level, similarly to how we rotated that R1, you guys are seeing buyers coming through trying to press this thing up, but the sellers are defending it. They cannot get any momentum to get back above that pivot. Couple more rotations. Here we get some more selling imbalances coming through, showing aggressive selling. And this is really the nail in the head for these buyers that were trying to get long up in these 20s for this flush down into that S1. Right, a little bit more rotations, and then there you go. There you get the aggressive selling coming through again, some sell imbalances, looking to target that S1 level. All right, you guys can see selling got more aggressive after we broke and held that pivot point as resistance, right? The flip level, the role reversal, the breakout, the retest, and the continuation. Sure, it wasn't as clean as a simple 1, 2, and down. This is what real trading looks like. It's not always going to be clean. Sometimes you get rotations, but ultimately what you guys can see is that that sell imbalance was being defended, and that sellers were defending that pivot point as resistance, which ultimately led to that sell-off where to our next target down below the S1. And so as we get towards the S1, what you're seeing, some buying is coming into the market. And so that's showing you this can act as potential support. And what can that be? If you get short up around the pivot level and you're looking to get paid around there, the fact that you are seeing some buying balances coming into that level, this is a target. That could be a downside target. And not a bad downside target at that. If you got short somewhere in these 19 halves, 3/4, even in the 20s for a run down to the S1, couple of ticks below, you're sitting pretty. All right, so that's a great place to look to start taking off some of the position. Not to say that you have to cover the whole thing, but as a professional trader, what you have to do is manage risk and get paid when you do have profits. So that's a great location to look to do just that. And let's see how this thing held as support. If it did hold as support, another rotation back down, and then some buying coming through. You guys can see nice aggressive buying coming in, some buying balances coming through as well. So there's a buying balance. Sellers coming in to defend it. And on this next rotation, nice big buy balance appears right around S1, showing us that there is some buying happening in there. And now another rotation, another buying balance. You could start seeing that there is some support coming in right around that level. And since there is support coming through at S1, what would you be looking for as a potential target to the upside? Granted, this would be a fade because the overall trend is bearish. This would be a fade, but if you're looking to fade from S1, what would be your target? Right around that pivot. All right, and that's essentially, there you go. And then pivot gets triggered right there. And now you can say, all right, back above this pivot, I can start looking for potential longs. What's going to be my target for those longs? That R1 level. And you guys can see we kind of traded above that pivot here. I'm not sure if we got all the way up to the R1 or not. We did not get all the way up to the R1. All right, but that is a good indication of how the market tends to trade around these levels. You can see that once we broke that pivot again right on here, we were saying that the target would be your R1. guess what? Sometimes the market doesn't go all the way up to your levels, and that's absolutely fine. If it doesn't hit that level, guess what? If it gets back to the pivot, breaks back below the pivot, next best trade is to look to use that support as resistance for a move back down to where? Targeting the S1. All right, so you guys can see it here again. It happened. We had a breakdown back below the pivot here, a couple of rotations, a nice solid smackdown. And once this level happens, any rotations up into the pivot should be defended by the sellers for a run back down to the S1. And that really, guys, is how we like to use pivot points on our day trading. We like to use them as sentiment indicators in the morning to get a good idea of where the market is opening relative to the pivot points for the current session. And if it's opening up near R1s, R2s, R3s, we tend to look for weakness on the morning. If it's opening up around S1s, S2s, S3s, we tend to look for strength off of the open. Alternatively, if we open right on the pivot, we have to wait and kind of get an idea of where the market might go. The open is above the pivot, higher likelihood that it's going to go higher off of the open. And same thing with an open back below the pivot. But if it opens back below the pivot, you're going to be looking for weakness to start the session. All right, guys, so that's going to be a wrap on today's video. Again, if you guys didn't have the chance to yet, please go ahead and smash that like button. And please go ahead and subscribe to the channel. Make sure to check off that notification bell just to make sure that you get notified anytime that we go live or drop any new content. Hope you guys enjoyed this one today. And until next time, good luck and good trading. Take care, Trade Bros.